Morning, Steve Freed in Chicago with the morning grain comments. Well, for the second day in a row, we've seen crude oil back off from its highs, and that's been offering some pressure to the grains. We also note that when you look at the fundamentals, you still got the bean bears that feel there's too much crop supply in South America, and that once this currency thing, both in Brazil and Argentina, subsides, those farmers down there will sell grain into the marketplace and offer resistance at these price levels. We also note that in the corn, you've got a record short position, and that's kind of amazed some of the old timers who feel that they really shouldn't have that big of a short position going into the growing season. And over in the wheat, you just got a little bit of anxiety going on because of some dryness in the western part of the wheat areas. We also see some pretty cool temperatures coming across the western part of Kansas this weekend, but it's not expected to hurt the crop. As far as the specifics go, Chinese futures were lower in the grains. Texas wheat crop was rated 46% good to excellent. Last year was 51. Kansas is 56 versus 41, and Oklahoma 67 versus 40. We did have okay weekly exports in beans, corn, and wheat, but we're still kind of running behind the pace to get the USDA numbers. We also note that we get an Oprah crush number today. The average guess is 140 million bushels versus 147 last year, and this slowing of the crush could help continue to allow oil to gain on meal. Yesterday, funds were buyers of oil, corn, wheat, and the sellers of meal, and still have that big position both in corn and wheat short going into the growing season. We have run into a little bit of farmers selling, especially in beans. We get close to that $9 level. Farmers still waiting to sell corn at higher prices. They have been forced to sell a little bit to start paying some of their bills for the 16 crop, but they still have a lot more to sell. And a little bit of wheat selling, especially once we get closer to some of these higher price levels, but not a lot. I think the farmer wants a little bit more for his wheat and a little bit concerned about the crop growing conditions. Some of the people feel that we still have too much crude oil supply. There was one comment by one analyst that said that crude may have bottomed, but it also may have topped. So that kind of gives you some of the idea of the conflicting views as far as where energy prices are going to go. So beans down 4 cents, corn down 2, wheat down a penny, and we'll see how we go into this weather market with the 6 to 10 day outlook calling for normal temps and below normal rain, especially in the southwest. But the 8 to 14 day actually warms things up and brings normal rains across the Midwest. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
$5298 for July cattle. That's selling a July cattle 152.25 stop. Where would you like